go. Crypto is having a meltdown and nobody agrees what to do about it. Let's be real for a second. These past weeks in crypto have been feeling like watching a group project fall apart. Everyone is panicking. One guy is still buying more stuff, the government finally writing something down, and in the background, Trump is swapping out the person controlling your mortgage rate. Normal week in this channel, honestly. 5 stories in the past weeks, all connected, all of them matter to your money. Let's go. The Great Escape, 3.8 billion walks out the door. We start with the mood of the market, and the mood was get me out. Over the past 4 weeks, crypto investment products sold 3.8 billion in outflows. Bitcoin ETP lost 133 million. US spot Bitcoin ETF shed 360 million in a single week. To put that into perspective, these are the same ETFs Wall Street was celebrating as a historic breakthrough just over a year ago. Now investors are pulling the money out like the building is on fire. What caused it? A bunch of things. Quantum computers fears. Yes, people are generally scared that the future computers could crack Bitcoin's encryption, even though that's likely decades away. Extreme fear sentiment in the markets. The crypto fear and greed index was so deep in red, and a realization that Bitcoin has dropped nearly 50% from its October heights. Even I am like, fuck. The result? 2.3 billion in realized losses. One of the largest capitulation events in recent memory. Here's the important word, capitulation. It means people gave up and sold. Historically, mass capitulation events like this have often preceded recoveries, but that's not guaranteed. That's just pattern recognition. Markets are not a vending machine. Well, for some.
Sure liking the video, like and subscribe.
Ready for number 2? Coinbase loses 667 million. And it's somehow not the worst part. If the market capitulation was the symptom, Coinbase is the diagnosis confirmed. America's largest crypto exchange just posted a 667 million net loss for Q4. That's a brutal reversal from the 1.3 billion profit it posted just over a year earlier, when Trump won the election and crypto went about feral. So what happened? 718 million write-down on their own crypto holdings. The good news, it was largely unrealized, meaning they didn't actually sell at a loss. The bad news, their stock dropped over 55% in the past 6 weeks. What? But wait, there is more. And CEO Brian Armstrong personally sold over 500 million in shares over 9 months. Nothing says more, I believe in this company, like selling $500 million in stock shares. That's Now, to be fair, let's zoom out, and it's not a disaster story. Full year trading volume hit 5.2 trillion. They have 11.3 billion in cash sitting around. And it's not just Coinbase. Kraken CFO quit. Robinhood's crypto revenue fell 38%. Gemini cut 25% of their staff. But the headline is the headline. 667 million gone in 3 months. The whole industry felt this. Meanwhile, one guy is still buying, while everyone else is panic selling. MicroStrategy went ahead and bought another 2,486 Bitcoin, bringing their total to this number. That's roughly 47 billion worth of Bitcoin at current prices. This company has more Bitcoin than most sovereign nations. For reference, El Salvador, popular for their crypto bro president, has about 7,500 Bitcoin in its national reserve, while the US and China about 200,000 each. People on Polymarket are already betting on when they'll buy again. That's how predictable they've become. While retail investors are flying, certain big players are treating every dip like a sell, as one should. The important question nobody is answering out loud: what happens if they ever need to sell? We covered that in a separate video, go watch it. The Genius Act and the rise of stablecoin regulations. Now, on a positive side, the government actually did something useful. The Genius Act, America's first real comprehensible stablecoin regulation, has been moving forward. The bill requires that every stablecoin be backed one-to-one with real assets and that issuers maintain full reserve transparency. Okay, in plain English, if you issue a stablecoin, you better actually have dollars to back it up. No funny business, no trust us bro reserves. The markets responded positively. We're seeing a multi-billion-dollar expansion in stablecoins. Clarity makes money flow, uncertainty chases it away. The Fed is getting a new boss, and it's complicated. And now for the story that touches everything else. Trump has officially nominated Kevin Walsh to replace Jerome Powell as Federal Reserve Chair. Powell's term ends in May. Walsh gets confirmed by the Senate. That's a big if. He steps in. But who is Walsh? Well, Stanford, Harvard Law, Morgan Stanley, former Fed governor during the 2008 financial crisis. On paper, he's extremely qualified. Markets actually liked the pick, partly because they were terrified Trump would nominate somebody less qualified. The bar was on the floor, and Walsh cleared it up. Now, here's where it gets complicated. Walsh is historically a hawk, meaning he prefers tighter policy and higher rates. But lately, he's been signaling support rate cuts in 2026, arguing that productivity gains could bring inflation down without wrecking growth. Trump wants lower rates. Walsh has, adjusted his position accordingly. Make of that what you will. If confirmed, most economists expect the Fed to hold rates steady through early 2026, then cut later in the year. So why does this matter for crypto? Well, check this video right here, I explain it perfectly. What does this all mean? The chaos and the opportunity are the same right now. The general sentiment right now is filled with a layer of cautious stubbornness. That's either a fake out or a breakout. Nobody knows which one. Anyone who tells you they do, they're trying to sell you something. So stay informed, don't make decisions based on panic, and subscribe now because this stuff never slows down.